But let's talk about Indian hotels now. We have Mr. Puneet Chhatwal, the Managing Director and Chief Executive Officer of Indian Hotels, joining us in the show. Mr. Chhatwal, good morning. Thank you so much for speaking with ET Now. Well, you've announced this big plan of 2025, the Ahvaan plan, wherein you are looking at increasing your total hotel projects to 300. You're also talking about increasing your margin levels, etc. How exactly do you plan to do all of that?
Good morning and thank you for having me. I think it's a combination of 4 or 5 key strategic imperatives, which we have also done in the past. So if you would recollect, we had announced Aspiration 2022, in which we said we will do 15 hotels a year to come to 75 over a 5-year business cycle, increase our margin by 800 basis points, which we achieved pre-COVID. Then, of course, COVID came and we suffered the lockdown. And now was the time to start with our strategy again over the business cycle till 2025. We remain very confident that with a pipeline of 60 plus hotels, with the highest signings in India in the last 2 years, in number of hotels and number of rooms, that we have the momentum to continue to grow our portfolio by another 60 plus hotels over the next 3.5 years to reach the 300 mark, to add more than 400 villas and bungalows in our homestay business with Ama. And also, because most of our growth is based on an asset-light model, so the management fee incomes from our old and newly reimagined businesses like Chambers, like home delivery, like homestays, will help us increase our margin by another 800 basis points. So at the end of the business cycle, we are expecting the 25% margin pre-COVID level to go to 33% plus.
Okay, that's some confident commentary coming in there. But Mr. Chhatwal, just wanted to understand, is this all organic growth that you're talking about, or there are some acquisitions also that are there in the pipeline?
Currently, we are looking at organic growth, but we are absolutely well positioned to take advantage of any inorganic or any M&A activity that might come in. But having signed on an average 18 to 20 hotels in the last 5 years, I do believe that there is no reason why we should not be able to do that in a post-COVID world going forward. And 90% of that growth, or 95% even of those new signings, will be in our home territory. And we have a very well diversified brandscape from a Taj to a Ginger to make that happen.
When we just talk about what's happening with the new app, the new kind of different businesses that you have come, you just briefly mentioned about it, sir, but that will be the growth area, that will be the high growth, high margin business that the company is looking at?
Yes, I think it's a good question, because we have our backbone was, is, and remains the Taj brand. That's complemented with our distribution platform of the SeleQtions, which has individual properties which are strong names in their own respective markets. Besides that, we have Vivanta, which is in the upscale segment. Our new businesses, because we say Ginger is an old name, but it's a new business since 4 years, is completely reimagined. Cumin, our home delivery, and Ama as our homestay are also digital businesses which will be supported by AI initiatives. So we have a separate app which has been very successful, driving more than 50% of our revenue in Cumin, and that's the Cumin app. We want to also move as much as possible with Ama also on the digital platform, and that will help to grow that brand. And of course, Ginger is a brand which is less heavy on service like a Taj or a SeleQtions or Vivanta would be. I think Ginger is very well positioned, and a lot of work has happened on that brand in the last 4 years to take advantage of all the digital initiatives. Having said that, we are also a founding member of Tata New, which is the loyalty platform that we were missing. I think being on that platform increases the reach for all our brands by a significant multiple, which as just a hotel company, we would not have been able to achieve on our own.
Mr. Chhatwal, hi there, good morning. And the growth and the margins so far have largely been driven by that asset-light model for the company. And now you're looking at continuing with that mix of 50-50 between the owned and leased and managed hotels. Take us through the plans on this front and the emphasis on being an asset-light model.
See, we are very blessed to have certain crown jewels which form our asset-heavy part, which is our iconic assets, whether we lease them or we own them. And we wanted to complement those with the asset light. And that growth journey we commenced in February 18 when we first communicated our targets for 2022. And we are actually just accelerating and building on what we have been doing well despite COVID over the last 4.5 years. To take that to the next level over the next 3.5 years. So we remain very confident that our asset-light model will continue to help us drive margins. We are very confident that our strict check on corporate overhead, our strict control on fixed costs, our newly developed model on the variable cost have helped us achieve in Q3 margin of Q3 of last year, a margin north of 30%, and in the Q4 north of 25%, and all this despite the third wave or the Omicron. And I think that is the proof of the business concept, and that's why as management, we are all relatively confident. Of course, it's all subject to no more pandemic and no more geopolitical issues. These are things that are beyond our reasonable control. But as far as the business model is concerned, the brands are concerned, the positioning of the brands is concerned, driving market share, driving RevPAR, and also helping scale up these brands, we will continue to do what we have been doing well in the last several years.
Right. Mr. Chhatwal, I also wanted to understand that, there's been a lot of costs which have gone up across the board, whether it is your operating cost, whether it is putting up new fixed asset, whether it is the maintenance cost, even prices of, rooms and various other things that, you sell have actually gone up. But has that had any demand impact, or do you think people are adjusting to the changes?
Well, demand and the pricing is really a consequence of the balance between demand and supply. The supply in the last several years has been constrained. And now when the demand is beginning to come back, both on the corporate and the leisure segment, leisure domestic has been quite resilient. International is beginning to pick up. Government delegations are beginning to pick up. IPL assisted in the months of April and May. So obviously, when demand goes up and supply stays, limited, then the rates and the occupancy increases are witnessed, and that's a natural consequence. And yes, it would be fair to say that in the last 2 months, the demand has been increasing on a daily basis. We are selling at higher than 1920 rates in most of the markets. There are few which are lagging behind. But it's just a matter of time, and I think in all the markets we would exceed the pre-COVID 1920 numbers on both rates and occupancies.
Well, Mr. Chhatwal, the prices going up is a good news for us, but we as consumers have been facing the brunt. The prices of, any vacation has gone up. The prices of tickets are higher. The room rates are much higher than what they were at pre-pandemic level. And that remains for a worry for us. So as a consumer, just a word to you, maybe try and look around that pricing a bit. But given the increase that we have seen in the cost, I'm guessing that's par for the cost.
With your permission, may I answer this on a lighter note?
Please go ahead.
With your permission, and also not to be misunderstood, I think the consumers have benefited immensely over the last 2 years when this sector was shut down. If only for 2 months the prices are high and maybe they stay like that for a few more months, it is good for the industry, it is good for the country, it is good for the GDP, it's good for job creation, it's good for direct jobs, but also for indirect jobs created in the sector. So the good of all is more important than the good of some individual consumers and the good of the industry. We should all thank God that the industry of tourism and aviation and hospitality, which was the biggest sufferer of, or the biggest victim, even I would call it, of the pandemic, is finally getting on its feet and is able to not only walk, start jogging a little bit. Let's let it run a sprint. And after that, we will definitely look at what you have been requesting.
Okay, Mr. Chhatwal, we'll let you go on that note. Thank you so much for making time and speaking with us today.